Hi, this is Ananya. Welcome to NewzBeats latest updates. Rakesh Jhunjhunwala's Airline launching in May makes unusual move. Akasa is preparing to start flying in late May, is taking the unusual approach of granting company shares to a bigger pool of top employees rather than a select group of senior executives. Akasa, a new Indian airline backed by billionaire Rakesh Jhunjhunwala, plans to offer stock options to attract staff using a lure from offer deployed by technology startups in its bid to gain a foothold in one of the world's most competitive air travel markets. The carrier, which is preparing to start flying in late May, is taking the unusual approach of granting company shares to a bigger pool of top employees rather than a select group of senior executives. As the aviation industry globally suffers from a talent shortfall, airlines have retrenched thousands of workers because of the pandemic, and many pilots have quit, either taking early retirement or switching careers. We want to have an organization that's very tight-knit in values, but diverse in experiences, genders, locations within India. Chief Executive Officer Vinay Dubey said in an interview, "We were saddened by the plight of employees through the pandemic. Some of the bankruptcies that have taken place in Indian aviation, and we wanted to create homes for them where they are happy." The degree to which Akasa plans to grant stock options for staff will be far greater than most airlines in India, and hopefully reminiscent of maybe some of the tech startups where they go fairly deep in the way they provide employees stock ownership plans, Dubey said. There isn't a suggestion stock options would be given to air crew or regular pilots, however. Putting the employee satisfaction so squarely front and center is an interesting strategy in a market that's historically gone after customers by offering cutthroat prices. Rock bottom airfares have long been a feature in India, which has a suite of no-frills carrier targeting the nation's huge flying public. Akasa, backed by some impressive aviation veterans, has hired around 50 employees for back office functions and is now recruiting pilots, flight attendants, and airport staff, said Dubey, who is also Akasa's founder and managing director. The careers page of Akasa's website, decked out in the airline's orange and purple brand identity with a tagline of "It's Your Sky," states that new applications have been paused after an unprecedented number of inquiries were received. It's flattering, overwhelming, but there is also a hint of sadness because I don't want so many people to be either unemployed or unhappy, said Dubey, who says 95% of staff call him by his first name. If we don't treat our employees well, if we don't take care of them, then it's very hard for them to take care of customers, which we want them to do. Customer service alone isn't going to alleviate the pain wrought by COVID, however. Airlines in India are expected to take an $8 billion hit from the pandemic, and even before the virus decimated air travel, the landscape was littered with failures. Former billionaires like liquor baron Vijay Mallya with Kingfisher Airlines and travel agent turned entrepreneur Naresh Goyal with Jet Airways India Limited couldn't crack the market, both venturing into cheap on-time budget business to augment their more premium offerings. Kingfisher folded in 2012 after failing to clear its dues to banks, staff, lessors, and airports, while Jet Airways has new owners following a court-monitored insolvency resolution process. Even those still in business find it tough. SpiceJet Limited almost collapsed before its founders returned to gain control and revive the company in 2015. Air India Limited survived on taxpayer bailouts worth billions of dollars before the government sold it to Tata Sons and the local ventures of Singapore Airlines Limited. And Malaysia tycoon Tony Fernandes, AirAsia BHD, both of which teamed up with Tata Sons, have never made money. Coupled with high taxes on aviation fuel, the sector is so riddled with brutal price wars that don't leave couriers any fat to cover costs. It's chronically ill, IndiGo's chief executive officer Ronojoy Datta said recently. Startups have a particularly difficult road ahead, said Robert Munn, the New York-based head of aviation consulting firm R.W. Munn and Company. The challenges before airline upstarts like Akasa include availability of sufficient capital and the need to stimulate flyer appetite with cheap fares upon launch, which generates good word of mouth leading to positive cash flow and eventual profit, he said. Dubey is optimistic in his airline, with secure financing and a low-cost structure, can succeed where others have failed. What gives us confidence is the way in which we have purchased our aircraft, established our long-term engine maintenance deals, the way in which we have started leasing our aircraft with the lessors, he said. The leadership team Akasa has attracted is also hyper-focused on the hundreds of elements that make up an airline's cost structure. Indeed, Akasa's founding team has a long history running airlines. Dubey is a former Delta Airlines, inclusive veteran who also ran Jet Airways until it went belly up in 2019. He briefly led Wadia Group's no-frills carrier Go Airlines India Limited and laid the groundwork for the budget carrier to file for an initial share sale. Akasa, operated by SNV Aviation Private Limited, is also backed by Aditya Ghosh, who spearheaded IndiGo for nearly a decade and propelled the once little-known startup to the nation's top spot, eventually capturing more than 50% of the market. Under Ghosh, IndiGo placed record aircraft orders worth tens of billions of dollars, had a blockbuster IPO, and catapulted itself ahead of AirAsia Group (BHT) and Spring Airlines Company to become the biggest budget airline in Asia by market value. Lower costs. Akasa plans a follow to similar playbook of growing at a breakneck pace, adding 18 aircraft during the year ending March 2023. The first deliveries from a November order for 72 Boeing Company 737 MAX jets worth $9 billion at sticker prices, a deal for the 737 MAX, which was grounded globally after fatal crashes in Indonesia and Ethiopia, probably helped Akasa secure bigger discounts than usual, considering it was one of the MAX's first new customers after the model's recertification. Akasa would also have taken advantage of the pandemic to get its aircraft and engine contracts right, which should help it achieve lower costs in the initial years. According to Kapil Kaul, South Asia Chief Executive Officer for Sydney-based CAPA Centre for Aviation, Akasa is on track to be well capitalized with a potential ability to raise $500 million through sale and leaseback of its aircraft over 5 years, he said. Jhunjhunwala initially pumped $35 billion into the airline. The carrier will begin flying internationally by the summer of 2023 when it inducts 20 aircraft, the minimum fleet requirement to serve overseas routes according to local regulations, Dubey said. Akasa will have an option of flying to the Middle East, Southeast Asia, Nepal, Bangladesh and Sri Lanka, all within the range of a 737 MAX. Akasa also plans to cut down queues at airports and reduce the amount of time passengers spend waiting to board by using technology, Dubey said without elaborating. If you look at the next 20 years, India aviation is going to continue to grow by leaps and bounds, Dubey said. India is geographically a very large country and aviation is under-penetrated. There are many people today who still haven't flown relative to most Western economies. All said and done, we are extremely bullish about the future. 100%. Akasa will be profitable. Hi, this is Ananya. Welcome to NewzBeats latest updates.